Hello traders, this is Rich from Tradesight. This is the market preview for Thursday, April 10th, 2014. We had a pretty good bounce back day today following on the previous day's bit of a measuring day. Following the release of the FOMC minutes at 2 p.m. New York time, the market really started to pick up to the upside and really start to make some hay. But the fact of the matter remains that we're still contained within the recent trading range and really haven't done anything either way to move the needle technically. Today we did have fairly positive internals, so that's definitely a positive to check off the list, and definitely nothing that was really truly divergent. But without further ado, let's move on and take a look at the futures and see what they have to tell us. Here at ES futures, you can see we crossed back above the 10 EMA. That's the blue line. But the fact remains that we're still basically contained within the previous range here. Still holding this 5/8 level here on the to the downside, and we've got key resistance here at the plus 1/8 level where we have our 13 exhaustion in place. If we do continue to the upside, key area to watch is going to be this 1875 area. To the downside, the 50 DMA that comes in about 1837, 1838 is going to be important. This is going to be if we do have an update tomorrow, it'll be the third day up on Thursday, so we may see some profit taking start to come into it. So that's also another consideration. The NASDAQ side of the market had a little bit of a better bounce today. The NASDAQ side was relatively strong versus the ES because it was more oversold. We settled pretty much in the area of this 4/8 level at 35.93. If we do continue to the upside, the level to watch is going to be the 50 DMA at about 36.19. We don't talk a lot about the Dow Jones futures, but wanted to point out that we did get our 13 exhaustion today on this little bounce back up here. The range is totally lateral, which means that just by definition from this signal, we're not looking for a big reversal to the downside, but really an arrest of the move to the upside here. We could definitely go all the way up into this plus 2/8 area at 1652. 16,562, which is perfectly coincident with the plus 2/8 level. That's our risk line. It's almost hard to see here, this little magenta line that's printing. So we've got our risk level here in place, and so this is going to be a really important area if we do roll back to the upside. To the downside, the 7/8 level, which is also coincident with the 50 DMA, has really been kind of defining the trade. All right, now here's the bonds. The bonds were lower on the day, and I think the one thing to keep in mind here is that the bonds were not really rolling over as the market was trying to start to come in, and now we're starting to see a little bit of a pullback here. So this 8/8 level at 109.38 is really in play. We never really challenged the old high here, even when the market was selling off fairly aggressively the last few days. So that keeps the chart intermediate term positive because we're above the 200 DMA and also the 50 DMA. Oil futures were again strong, broke out above the static trend line. This is now a velocity break because we broke out above the static trend line. That's here in green on only 3 candles up. So that actually puts this 8/8 level at 106.25 in place. If we retreat back to the downside, expect really strong resistance here, just anywhere above 100. We've got the 100 level, which is the 4/8 level on the GAN box, which is one of the major levels, plus the 50, the 200, and the 10 EMA are right in that vicinity. The gold futures today were a little bit positive, but really didn't get too much range expansion to the upside. We're up modestly on the day. Still above all the major moving averages, even by a fraction here with the 50 EMA, 50 period moving average, which is the red one. Only 4 days up here in this seeker setup, so we could definitely be poised for a return back to the static trend line up here, which is just below the 8/8 level and a little bit below 1375, coming in about 1367 right now. As far as the individual sectors go, they were all pretty much positive today. The banking index was a little bit of a laggard. You can see the BKX here, the green line. Didn't have too much to show for it. The SOX was fairly strong, but didn't challenge the previous high. The XAU was a little bit higher on the day, and the BTK did take a fairly decent bounce. All right, but before we dig into the individual sectors, let's take a look at the 10-day trend, which is our key oversold, overbought metric. Right now we're at about right around that one level with a bit of a downward bias. We closed at 1.08 today, so we've got gas in the tank here to go back to the upside before we get to that overbought area at 0.85. But at the same time, if we do roll to the downside, keep in mind that there's a lot of room here before we get anywhere near this 1.35 area of being short-term oversold. Here's a look at the individual sectors. The BTK was top gun by a good margin. That was up just a little less than 4%, so big day there. Airline index was very strong. The defense index was strong. Pharmaceuticals were up 2%, but the drug stocks have really gotten hit the last couple of days, so that's pretty much a bounce back. One thing here is the Dow transports were much stronger than the overall broad market, which is a nice little showing of strength. The SOX, the OSX rather, the oil services sector did lag, which was a little bit of a problem. Would have been nicer to have that a little bit higher on the list to really kind of support the transports. I want to start with the last laggards here today when we drill down into the individual sectors. The utility index recorded 13 bars up yesterday, and we're in the overbought area of the GAN box. So expect has some pretty good resistance up in here. This is definitely something that should roll back to the downside. We've got a little bit of extension. It's not great. The one candle's all the way up here, so there's not a lot of extension between 1 and 13, but we are in the overbought area on the GAN box, so we could definitely see a roll back down to 7/8, perhaps even 6/8 on this chart. The oil services index was not great today. We still have our 13 exhaustion in place. They really didn't come for this one very well today. And if we do take out this this 3-day low here, which is right in the area of about 20, call it 285, that's going to really start to roll this thing to the downside and probably wind up undercutting 4/8 and putting the 50 DMA in play. Semiconductor index on the day was a little bit better, but we still have our 13 exhaustion in place, so this could be a little bit of a bounce and a retest. If we do roll back to the upside tomorrow, keep an eye on this 6/8 level at 59 at 593 3/4. To the downside, big level is going to be this 562.50 area, which is where the 50 DMA is sitting with the 4/8 level on the GAN box. We did close back above the 10 EMA, but we don't qualify that until we get one tick above the previous day's range to go back to short-term positive. Transports on the day had a really strong up candle. We clocked 10 days up now on the Seeker. So there is a potential that we could get an exhaustion warning sometime next week from the Seeker. So definitely keep an eye on that. And best thing would be if it came in right at this 8/8 level at 78.1250. So if we do start to break the new highs, watch the bar count. If the bar count is not in your way, I definitely want to play this one on the long side until we reach that exhaustion point. And finally, let's close with the BTK. The BTK was positive on the day, but you can see we're still below the 50-period moving average. We did settle just a little bit above the 10 EMA. We've had a lot of downside here after this exhaustion gap to the upside. So we could wind up seeing a little bit of a run to the upside here. We did get a price flip, which is always positive. This is one day up. This day is higher than 4 closes ago, which qualifies for a price flip. So we'll have to see if we can build on this. If we do roll to the upside, expect some pretty good resistance at the 50 DMA. To the downside, if we go back down again tomorrow, probably find some support here at 4/8 at this 2500 level. The other neat feature on this chart is look how precisely the chart used the static trend line, which is the 1 through 9, the low point from that. That's the red line that's plotted automatically on the chart. We use that to the tick as support to reverse this back to the upside. So always make sure you're focused on the static trend lines when they start to come into range, because they are very, very important areas of support, resistance, and also important breakdown and breakout levels, just like we broke out today to the upside in the oil futures. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.